Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, January 29th, 2020. I'll keep this one brief. We'll keep this one for subscribers. I did one on the YouTube channel just covering pretty much everything I covered in today's video. So there's no reason to cover, beat a dead horse, cover the same thing twice. If you haven't seen that video, check it out. The key points were, I'll just summarize it here in case you didn't have time. I understand some of your work and do other things, and maybe trading is a part-time thing. The VIX broke out on Monday, which was confirmation of the breakdowns that we had in on the stock market on Friday, QQQ that is, and SPY. Then again on Sunday, Monday, Apple broke down on Monday, and we back tested today. So also for subscribers, I added TVIX as an active trade today. I'm just kind of layering it in there. Figure, again, take it if you want. It's still aggressive, still a counter trend trade, but objective because we came in, we had the breakout, pull back. The markets, rallied as, bounced off that support. They opened down on Monday as expected, hit my maximum bounce target zones, which coincided perfectly with a back test here of both the trend line and that 1573 former resistance, now support. So this is where I think things are going. And when I say objective, what I mean by that is, look, doesn't mean high probability, doesn't mean guarantee of success. It just means this is where an objective long entry is after a breakout of a downtrend line and pulse a breakout. If you get a back test of that trend line and or a horizontal support level like you did here, and you have both in that case, you go long there with a stop somewhat below. So the stops on that TVIX trade are, percentage terms are big, but they're actually the risk reward. If you look at the profit potential to the final target compared to the downside loss if stopped out, the risk reward is very favorable. I know it's higher than 3 to 1. I forget exactly what it is now. All right, so that's kind of what was covered today. And QQQ, let's just look at those charts. I'll look at SPY here in a second for you too. I haven't done that in a while. We have this trend line right here. This is a primary trend line on the daily chart we're looking at right here. And so what happened is you see this smaller trend line, this minor trend line. That's the 60-minute chart trend line that broke down. Remember, that's right here. This is what I was looking at on the 60-minute chart. I've been toggling between these two boards. The yellow, the benefit of the doubt trend line right there. The lower, both of the trend lines were taken out. Yeah, that was Monday again. I'm sorry, excuse me, Friday. Gap down Monday, hit that 217.70 support where I favored a bounce and reversed. And this was my max bounce target. 221 was my preferred bounce target. That's where I closed out the longs and went back short. And we went a little bit, above the max bounce target, but slightly. I have to measure from here. We're talking a fraction of a percent. So really, for all intents and purposes, we reversed so far, stopped cold at that max bounce target. Not exactly on it, but almost. And so nothing's changed. The other things I pointed out today, PPO, the white line here, the white dotted line is the 9 EMA down here, this white dotted line or dash line. And this is a zero line. When it's above that, the trend is bullish. And when it crosses below, the trend is bearish. And often when you're above or below, that zero line will act as support or resistance. So when you're below, it'll act as resistance on a back test. So this would all mesh. This is what I think is most likely going to happen, but I don't have the utmost confidence, and that's why I'm still holding off until tomorrow, see how the market absorbs what Facebook and Microsoft have to say on their conference calls tonight. And and how the market acts in the open tomorrow. But if we start to go down, and especially if we take out those lows from Monday, that 217.70-ish level, that should open the door up for a move. At that point, at the very least, my minimum target. Remember the green levels. I know this looks like a Christmas tree with all these colors. This down to here, this is my preferred target zone with a minimum preferred target right there. Each of these are targets or support levels along the way, but this is the zone where I expect us to go down to, and we'll see what happens. But I just want to let you know that will start to firm up the bearish case, and especially if we take out Monday's lows, that's probably going to open a move up down to about that 211.42 level. And if so, that would be a drop of 4.5%. But what I'm going to be doing at that time, when it happens, this all may be moot. I can spend 20, 30 minutes doing these videos, and then guess what? If the market just does this, boom, 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 then it's all moot and it just never panned out. But if it does start to pan out that way, I'll turn my focus to the daily charts, because look what will happen. We'll take out any drop much below, well, if we drop below, yeah, certainly below Monday's low, right there around 217.50 or so, we're going to have taken out this trend line, and that then triggers a more powerful sell signal in the daily time frame. SPY, I have different variations of SPY, but this is probably the cleanest trend line you can see there. You have here's your divergence line. It's not drawn out here, but you can just see where the divergences are. Indicators making equal or lower highs with prices making higher highs. It's also that price channel in SPY. Boom, breakdown right there on Monday, and we're still below there. So this would also mesh with what seems to me is the most likely scenario, and that would be maybe a back test if we get a little lift in the morning, or not, because again, QQQ is pretty much at the upper end of my bounce target, and then a move down here. Let me give you one more line for you SPY traders. I would be remiss not to put a level right here at about 320.34. That would be the first target. Again, this is a daily chart here, so you can see these levels pretty clearly. This one, and I'm going to take that one away. I don't think that one's that significant. I think if we break 320.34, by a good margin, doesn't mean to the penny there, that opens the door down to about 315.50. So let me give you a range there. If that were to play out, again, it would all depend. If we go higher, it's going to be a little, larger drop than what I'm about to tell you here. But from here, about 2 to 3%, which is usually going to be a little less than QQQ, because SPY is not as volatile. All right, what else did I want to cover? I think that's it. Oh yeah, let's look at Facebook. We'll mention it. This is a daily chart. Facebook. On the daily chart, here's the thing. We took out this trend line here, this uptrend line right there, starts at this point. Pretty clean trend line. You had a trend line here, right? It was broken, back tested, we had a correction. Then the uptrend resumed, and what happened is we made a high level back test. If you extend that trend line, which I've done here, we made a high level back test, which gave us this price channel, which is now broken and pretty much back tested right at the close today. You can see we closed pretty much on it, and this may be reflecting after hour trades. You can see Facebook's down in after hours. Here's where we closed, this shaded area right here that I'm circling over, that's after hours. So here's where we closed, and as of now you can see that Facebook is down about 6.8% after earnings. And there's what it looks like on the 60-minute chart. I went over all these recently, and the charts to me on all but Amazon were really clearly bearish. Amazon was not bullish or bearish, and it's going to follow the rest of the lot most likely if they go up or down. But that's what happened to Facebook. It broke down here, had a little kickback rally, put in, just simply extended the divergences that were there, and now those divergences are playing out. And so this, if you take a step back, this is what my expectation for the broad markets are, at least at minimum an A, B, C corrective wave right there. And Facebook, it's trying to get back on that 208.79 support, a little momentum fueled overshoot. If it can't hold that, if it drops below that 208.79-ish support, then the next stop is right here, 203.51. So if you're a bull and you want to go long, or even an active trader, neither bull nor bear, you're just looking at game bounces and getting out, that's an objective long with a stop somewhat below. But keep in mind, if the broad market buckles, Facebook's probably going to take that out. If the broad market takes another 5% plus drop, and then that opens the door, as you can see, to the next target. So either way, there's some levels for you to trade if you want, but it's going to be volatile between now and the end of the overnight trading session, maybe until tomorrow. Microsoft broke down on Monday as well with everything else, but hit support. I covered that in today's video, and then snap back. And of course, they did that right before earnings, so that wouldn't have been a good. You wouldn't wanted to take that sell signal. Number one, because you had a benefit of the doubt support level just below. It held that support, snapped back into the channel. But I can say this: that Microsoft now, if you look at it this way, when you are in a price channel and you recognize a price channel like this one, the MO is simple. You go long at the bottom of the channel, and you ride it up to the top and you sell at the top, and then you either get out or you short at the top. Even if you short it here, you went a little bit underwater ever so slightly, but then you had to move down to the bottom of the channel. From there, zigzag, and you eventually moved up to the top, bottom, we're at the top again. So like I said, I can't promise you where it goes, but it's objective. Now, it's not my favorite trade, so I wouldn't, to me, why not just short QQQ or NQ? Because then you don't run the risk of, if you pick of the 5 FAANG stocks, Facebook, Apple, Microsoft, any of them, you might just have the dumb luck that you picked the one of the 5 that happens to go up strong when the rest drop over the next few weeks. Or maybe you pick the one that holds up the most. Again, if the market goes down impulsively, they're all probably going to go with it. But I just wanted to point that out. And so this analysis, really what I'm doing here with Microsoft, Facebook, Apple, and all those, is just to show you, what the market's going to do, because you can take the remaining 95 stocks in the NASDAQ 100, throw them aside, because where that index goes depends almost, I won't say exclusively, but largely on where these 5 go: Apple, Amazon, Microsoft, Facebook, and Alphabet. And there's Apple. So Apple, broke the trend line there, bounced off that 307 support, back test, and so just like QQQ, I think, again, it's my preferred scenario. I'm not going to add to my shorts yet. Tomorrow, maybe. But I think this is what happens, and then you want to see, just like you want to see Monday's lows taken out in QQQ, you want to see the same thing in Apple. That opens the door for a move down, and again, potentially, I could see a potential move all the way back down here, and that's about over time, that's a 15% drop. Getting way ahead of ourselves now, because we have to break those daily trend lines on QQQ. And what you can see here too is on Apple right there, you have another trend line on this chart. Yeah, it's about 12%. So first things first, I may do this. It all may be moot. Where will it start to be moot? Well, tomorrow, if the market has a strong day up and Apple closes well above this trend line, Microsoft remains above this uptrend line. These are daily charts here. QQQ holds above this trend line, gets back up here, and like I said, it's not going to eliminate the bearish case, but it's certainly not going to help it. To help it, you want to see right now, I think, a reversal tomorrow, a big red close tomorrow. Let's just keep it that simple. Anything less, I can only tell you what I'm doing. I'm just going to keep it light. And kind of play it by ear and see how the next day goes. Alright, so let's wrap it up here, and we'll pick it up tomorrow, see what happens. This has been Randy Finney with the Right Side of the Chart. Have a great night.